Well, hello and welcome to this Moneycontrol live stream. You're watching Morning Trade with me, Nandita Khemka. It's a Friday morning and the cues coming out of SGX Nifty are extremely positive. Looks like we are set for a new high today as well, given the fact that the SGX Nifty had hit that 19,200 mark as well. Over the next 30 minutes, we'll be talking about all the cues for trade, all the stocks in news, and of course, we'll also be getting all your stock-related queries answered by our technical expert on the show. So if you have any queries, as usual, shoot them in and send them into our on our YouTube feed and we will have them addressed. But before we do all that, let's take a look at the top headlines at this hour. Dow Jones and the S&P 500 close higher as big banks gain after clearing the Fed's annual stress test. All three indices are set to clock a winning week. Meanwhile, Asian markets are largely lower while the adjusted SGX Nifty is signaling a fresh high for the Nifty. At the TCS AGM, new CEO K. Krithivasan says the company has returned over 90% of cash generated to shareholders. Chairman N. Chandrasekaran warns of downside risks to global economic growth and says that AI and machine learning will have a profound impact on the business. And among stocks in news today, BPCL gets board nod to raise 18,000 crore rupees. ICICI Securities to become 100% subsidiary of ICICI Bank, and two block deals likely today, Creditaccess, Grameen and TD Power. Market regulator SEBI cuts the time period for listing of shares post-IPO to 3 days from 6 days earlier. Also amends FPI disclosure norms for those holding 50% of Indian equity AUM in a single corporate group or over 25,000 crore of equity AUM in the Indian market. Chairperson Madhuri Puri Butch also says new draft total expense ratio regulations will be published soon. And the government postpones implementation of tax collected at source under the liberal remittance scheme to the 1st of October. The Finance Ministry also says there will be no change in rates for payments up to 7 lakh rupees, while overseas credit card transactions will not be subject to the levy. Well, let's get on board our first guest for today. Rohit Srivastava, founder and strategist at Indiacharts, is joining in this morning. Good morning, Rohit. Good to have you on the show. Firstly, what is your take on the kind of rally that we have seen in the Indian market since March? Do you expect some kind of correction to kick in, or do you think it's a long rally from here? And the fact that 20,000 could become a reality maybe by the end of the coming quarter.
So I think after every, run up, whenever the market pauses, there's hope that, you see some correction, retracement or pullback. But what we've noticed is that these pullbacks always end up being small, just like, a week before last week's expiry. We saw a pullback to the 20-day average around 18,700. And from there, we've taken off to new highs. So what this is indicating is an extended move that is unlikely to see much more significant declines, so you're not going to get that 500,000 point pullback if anybody is looking for it. You'll get these small ones and then it continues to extend higher. And the reason for that is there's a lot of rotation from one sector to the next, and that sector rotation is enabling the indices to continue and extend on the back of one or the other that is performing at that moment in time. So in short, it doesn't look like it's going to be stopping. We do have, a couple of resistance levels to watch out for. For example, 19,050 will be the first one we'll watch for, which is the trend line of all the highs that we made from 2021 to 2022. But apparently the Nifty 500 or the Nifty Midcap 100 have already surpassed that level. So which is why what we are doing is we are trying to make some Fibonacci projections this morning for Nifty and Bank Nifty. For the Nifty, that would then extend above that, to almost near 19,370. And in terms of Bank Nifty, you'd probably see that extend all the way to around 44,950. So those are the two next major levels that we'll look for as this rally continues to extend.
Right. Rohit, you spoke about sector rotation. The first half, of course, we've seen this rally being led by consumption, talk about auto, realty, and FMCG. But, do you think the focus in the second half will shift to engineering and capital goods, which, by the way, has been, widely termed as an unloved sector in the market. So would you say that, the second half will be dominated by the manufacturing theme now?
So I think there are two things to this. One is long term and one is short term. Longer term, I think the themes that were really doing well over the last 6 months, which is capital goods, defense, and so on, these will continue to really be major market performers from an investment standpoint. But coming to rotation is something which happens in the very near term. So after this recent pullback, for example, we've been trying to scan on our new strike software. And what we look for is something known as the Dow trend, which is essentially which stocks are making higher highs and higher lows and confirming trend reversals. And what we ended up getting over the last few days is a lot of auto stocks. So definitely that is one segment, as you mentioned, within consumption, which is showing momentum right now. Almost, I think, even yesterday, there are 3 auto stocks on the list. Around 2 days ago, there were another 3, 4. So that makes up one sector which is likely to be driving this move to the upside. The other one is, of course, banking, because banking has actually been through a pullback. Unlike the Nifty, which did not even go below the 20-day average, the banking sector did see a pullback much down to the 40-day average. And, it was a decent 3-week correction because it didn't make new highs in 3 weeks. And now the bank sector is beginning to participate. So I think autos and financials are 2 sectors which are likely to lead this rally. Now, that doesn't mean that you do not get others participating, but definitely we are seeing the mid-cap lagging behind, because if you take a 3 or 4 week picture, the Nifty was lagging the mid-caps. The mid-caps were really going up vertically. Now what we are seeing is large caps beginning to participate as well.
Right. Rohit, I also want to get your thoughts on the life insurance stocks, the likes of SBI Life, HDFC Life. All of these stocks had come under a fair bit of pressure after budget, but since then they have made a very smart comeback, and most of them have in fact run up somewhere around 30 to 40% or thereabouts. Should people look at some of these stocks now? SBI Life, HDFC Life. What are your thoughts?
So if people are interested in taking a long-term bet, insurance stocks are not something that will, completely remain in dumps forever. If you take a slightly bigger picture, what you'll notice is that most of these insurance stocks, which you mentioned, whether it's HDFC Life or whether it's ICICI Pru and so on, all of them have retraced around 61% of the entire rally that they saw between 2020 and 21. So that means they made a higher bottom, but it was a deep retracement, So the deep retracement probably got people concerned. What we are seeing now is a comeback from that level. So it's really interesting, because if you hold the 61% retracement level, then it is a signature of a larger trend still being intact. The secondary question is, whether insurance outperforms the general banking sector or not. And that's a slightly difficult question to answer in terms of, where the relative performance will be. But I'm sure that the bottom is in for the insurance sector because of, these retracements holding, which means that the most recent rally is just the beginning of a new wave. And as and when there are pullbacks, there will be opportunities to really enter the sector.
All right. Lastly, I want to get in your thoughts on the specialty chemical basket. Earnings haven't been all that great. And this year, I think most of these specialty chemical companies haven't really been doing all that well. But given the fact that, there is an anti-China wave, sentiment in the, in the global market. So would you say that the China plus one theme would start playing out for some of these specialty chemical names, and should one look at them now?
So the theme is definitely in place, but what has happened, I think, is because that sector was in limelight over the last, 3 to 5 years, where they, some of them were actually multi-baggers. The valuations ended up being extremely extended, which is why you've seen a prolonged consolidation phase. So I think they're going to move up pretty slowly. They have started to trend up a little bit, but it's not going to be easy out of, when you're in a high value basket, people start, playing that game of looking for better value somewhere else, which is sort of what drove the rally in, say, PSU stocks all of last year, where money was moving out of growth into value. And so similarly, even now, if you take manufacturing, there are a lot of manufacturing companies getting listed, which are not just in the chemical space, but electronics and others. And you have seen those perform much better than the chemical names. So I think those mismatches in valuation is driving money to places where there is better value. That is probably the reason you're seeing chemicals underperform. That doesn't mean they may not participate on the upside, but I think the move could be slower than other parts of the market.
All right, that's the view then. With that, Rohit, thanks a lot for taking out time and joining in this morning. It was a pleasure having a chat with you.
Thank you.
Well, with that, let's also bring on board our next expert for today. Raja Venkatraman of Neotrader is joining in. Good morning, Raja. We saw new highs on Wednesday, and this morning SGX indicating newer highs. What are the levels you'll be watching out for on the index on the higher level?
Yeah, good morning, Nandita. So the entire move which we are seeing in SGX is clearly indicating that yes, there is a potential for the entire market to open with a positive note, and yes, of course, an upward gap as well. So there are a lot of positive vibes that are coming along in the market, and that's clearly evident, giving us an evidence that yes, there are a lot of positive triggers which are emerging, and with the launch of the gift Nifty, which is going to come up next week, so you can see that a lot of action is emerging on the indices, and all this is triggering some positive reaction in the market. So now I would say that one of the biggest triggers has been the confirmation of the merger of HDFC Bank and HDFC, and all this is that once the date was finalized, it saw a very positive momentum in the market. If you can track it down to those two particular stocks, they have a good play on the market sentiment as well. So we are seeing that triggered some sentiment, plus the overall FII inflows which have steadily improved after a very muted start to the year. If you just take a look at the kind of steady inflows which have emerged into the markets, it has been quite phenomenal, and that is also giving a lot of impetus to the overall positive trend, and also in combination with the macro factors. So we are having a lot of positive triggers, and that has taken Nifty to the higher level. Now I am expecting that the Bank Nifty, right? Bank Nifty has been hovering around the 43,500 to 44,500 mark, and this could be a takeoff from there. So private banks have already started moving. Now if the PSU banks also start firing, then we could see some very strong move in Nifty. So I'm expecting Nifty to move towards 19,400 to 19,600 within the next few weeks. So we're going to have a very bang on start to the July series. Let's see whether this positive momentum holds, because even if you take a look at the OI data, we are seeing a PCR of around 1.3 to 1.4.
Right.
And that is clearly indicating that a lot of put shorting is happening at lower levels. So there are a lot of lower levels being defended. So on the lower levels, if you want to track the Nifty, it would be somewhere in the region of around 18,900, which would be a good support area, and in Bank Nifty would be 44,000.
Right. All right, that's the view, and 19,400 to 19,600 to watch out for on the Nifty over the next couple of weeks. Let's talk about the stock of the day. According to me, it should be MCX, given the fact that it has extended its software support deal with with 63 moons at a higher cost of 125 crore rupees per quarter. Now, this is way higher than the 87 crores that was there earlier, right? This deal, in fact, has been extended for 6 months. Now, this could come as an overhang for the stock. The stock has done pretty well over the last 1 month, rather. It has amassed gains to the tune of 13% or thereabouts, and it's very close to its 52-week highs. But this comes as a sentiment dampener for the stock, given the fact that the company was looking to migrate to its own software system, right? So, what should one do with MCX? Do you think this bit of news will slam the brakes on the kind of up move it has seen over the last month or thereabouts?
Yeah, you're absolutely right, because in the last, it has moved to the 6-month high, which last was found in December, and the kind of positive sentiment which was being seen earlier could now take a break at the current juncture. Now, if this positive sentiment, if this news flow, which is seeming to be negative, if it is already been absorbed, then a move from here could take it all the way towards 1800, which is a potential target for MCX. So yes, one needs to see how the market reacts to this news, because it is at an inflection point.
All right, we'll have to wait and watch as to how the markets react to this. Let's talk about BPCL. It has gained 2% on Wednesday, but it was awaiting board nod for a massive fundraise of 18,000 crore rupees or thereabouts, and it has got it. But do you think this huge fundraise that the company has planned, do you think there is no rationale to it right now, and it could actually limit the upside on the stock going forward?
See, there are steady news flows which keep coming in into the OMC stocks, OMC re-rating, or these kind of corporate actions. But then what I found is that if you want to engage into a stock like BPCL, IOC, HPCL, it would be largely purely on an intraday play. And if you are looking for a momentum play, if you are looking for a multi-day play, then you have to play the waiting game. Now, considering the way the BPCL structure is set up, it is clearly indicating that there are some positive vibes which are emerging, and it could stretch towards the region of around 400 within the next few days. So, if you're willing to hold on, you could take a trade in this stock with a stop loss below 355.
All right, that's the call on BPCL. Then let's talk about HDFC AMC. There is a brokerage call on the stock. SEBI chief has said that they will come out with a new set of regulations or TR norms for HDFC or for AMC stocks, right? For the in fact AMC industry. So this bit of news comes as a positive for some of these AMC stocks, given the fact that they had seen a knee-jerk reaction last time around. So given the fact that Morgan Stanley has an equal weight rating on the stock with a target price of 1840 or thereabouts, the target price, of course, is lesser than the current price for HDFC AMC. SEBI has said that it will, of course, release a revised consultation paper on total expense ratios. This, Morgan Stanley believes, is a likely positive for these AMC stocks. In fact, at the margins, it says it's a good set of news for the AMC industry as such. But when you look at HDFC AMC, do you think one should take position in this counter right now, or should you wait for the stock to fall below 2000 and then take an entry?
No, the stock is very well placed right now, and considering the kind of positive vibes that are emerging in the group itself, so you are noticing that all the group stocks are also performing. So they all are moving together, and the news flow could also act as a further tailwind. So one should look to buy this at current levels, because on the upside you clearly have room till around 2300.
All right, room for the stock to head to 2300. Let's also talk about Coal India. There's a query coming in on our feed on Coal India. Raja, what are the kind of levels you'll be watching out for this one, and should one take position in this, or should one wait for a dip to come about?
One needs to understand that if one needs to participate in a stock like Coal India, it's a highly slow mover stock. It's a very, very slow moving stock, and Coal India currently it's in a declining phase at the moment. Yes, so if you want to get into the stock right now, it's declined a little bit, and what I'm noticing that the stock has come into some decent set of supports here. So if you're going to buy into the stock, you got to have a time window for holding for at least for the next 2 months, because then you could see it scale up towards 248.
All right, that's the call there on Coal India. Let's take up a query on Tata Communications. This one is coming in from Vishal Shetty. Stock was up 0.5% or thereabouts on Wednesday. Over the last 1 month, it has gained somewhere around 20% or thereabouts. There is news flow around this counter that the company will be acquiring, a US listed firm in a cash-only transaction at a price of $7.25 for a total consideration to, the acquisition is around $100 million or thereabouts. So 21% over the last 1 month. Do you think it has run up a fair bit, and it's heading towards its 52-week highs? It's 52-week highs as well. But should one wait for the counter to see some bit of a cool off before entering?
So it's already run up quite a bit. So at the current juncture, the movement could be a little bit range bound. So one should avoid this stock at the moment.
All right, avoid Tata Communications at the moment. Let's talk about ICICI Securities. Of course, it has gotten the board nod to delist, and then it will become a 100% subsidiary of ICICI Bank post listing, and the ratio is somewhere around 67 shares of every 100 shares of ICICI Securities will fetch 67 shares of ICICI Bank. Do you think this is a fair ratio, and should one look at ICICI Securities, because all in all it is a good a move for the company, given the fact that it will have the freedom to innovate and in a highly competitive market?
Yeah, considering the sector in which they are, there are better stocks to, if you're going to buy it based on the kind of sector in which they are. So there are better stocks from this particular sector to buy into. And if you're trying to play the group, then I would say definitely you could look at ICICI GI or ICICI Pru that are definitely performing much better, and they are able to sustain the positive momentum, because this stock could witness some supply pressure, and I would not be a buyer in ICICI Securities.
All right, not a buyer in ICICI Securities. Let's take up a query then on RBL Bank. Vivek Kurup has written in, wants to know your thoughts on this stock. He's bought at 175 and he wants to know what should he keep as a target. What would you advise him to do? The stock was up somewhere around 5% on Wednesday, if I'm not mistaken.
Yeah. So yes, this stock is definitely in a positive territory. It had some pains at the start of the year, but that seems to have been resolved, and it is showing some way to the movement to the way up. You can expect a target towards 185 to 190 within the next few days.
All right, expect a target of 185 to 90 over the next few days. I hope that answers your query. Let's take up a query on Gravita then. Raja, what are your thoughts on Gravita? This one is coming in from Anup. Would you advise investors to look at this one, or should one steer clear?
Yeah, see, if you take a look at the entire move since the last 1 year, it has definitely gone up threefold. But then the kind of pain that it endures is what will test your patience. So if you're willing to hold on, then it could be a multi-month play, and you could see it travel towards 1,000 by the end of next year. By the end of this year, I mean.
All right.
But however, you got to have that waiting game. So if you're willing to hold on, then this is definitely a good move to participate.
All right, that's the view then. Let's get in a query on Tata Steel. Jagdish wants to know your thoughts on this one. Like, if you look at Tata Steel, I think over the last 5 days, 5 trading sessions rather, it has been stuck in a range around that 111 range. But do you expect the counter to make a dash at its 52-week highs of 120 or 125 levels or thereabouts over the next couple of weeks?
The metal sector has definitely fared on well, and in comparison to Tata Steel, some other names like JSW Steel, Jindal Steel, they have done fairly better. So again, a two-pronged question: either you're playing the sector or you're playing the group. So if you're playing the group, then this is not the stock which you should be participating in. And if you're playing the sector, then the names which I mentioned are the better ones.
All right, that's the view then. But last query for the day, I think we're running out of time. But this query is coming in on Voltas. Now, of course, this stock has been hitting a 52-week low, and Kshitij has written in, wants to know your the target for the next 2 to 3 months.
Okay, so when you take a look at Voltas, it's clearly highlighting that the overall move which you are witnessing in Voltas has been quite bearish. Now, if you are looking to hold on to the bearish view, I would suggest that the bearish view, until and unless we see some kind of negative pressure in the market, you are not going to see the bearish decline. So in such a scenario, I would advise that you ignore Voltas and participate in the other moving counters. That's what I suggest, that all of us want to go short, but if the market is not willing to abide by our request, then we should go on the long side.
All right, that's the call on Voltas. Before I come to your picks, Raja, 2 stocks I want to get in your thoughts on: Creditaccess, Grameen and TD Power. These 2 stocks, there is likely to be a block deal in these 2 counters today. So what are the levels you will be watching out for on these 2 stocks, especially for today?
Yeah, so Creditaccess Grameen has shown a phenomenal move in the last week, and what it's witnessing now is some bit of a profit booking, I would say. So if you're looking to buy it at lower levels, the lower levels would be in the region of around 1250. So that would be a good support area to buy into Creditaccess. Sorry, I missed your other name.
TD Power.
Okay, DB par has been waxing and waning. So if you want to consider DB par for a long opportunity, then this is a stock which I would like to ignore.
All right, that's the call on those two stocks. Raja, with that, leave us with some stock recommendations for our viewers.
Yeah, so I would like to go in with two stock recommendations, and I would like to go in with a long in Titan at current levels, placing a stop at 2990 for a target of 3085 and 3125. So 3085 to 95 and 3125 will be a trade in Titan, and there's a good dip which has emerged in Bajaj Finance, so I would be a buyer in Bajaj Finance at current levels, place a stop loss below 7050 for a target towards 7185 and 7225.
All right, Bajaj Finance and Titan, two recommendations coming in from Raja. With that, Raja, thanks a lot for taking out time and joining in this morning and addressing all of your queries as well. Well, with that, it's a wrap on this edition of Morning Trade. From me and the entire team, thanks a lot for watching. Have a great weekend. I'm out of here, but you stay put because coming up next is Opening Bell.